So it's not a very good way to end the week. The S&P 500 took a big hit. We see some selling off to end the week, and it's not a good sign. So we can see here I'm down $1,700 on the day. A big hitter here is the E-mini S&P 500, my 30-10-20 strategy. We'll go into the moves that I made today. We see copper. It went up, it came down, and then after hours it jumped back up. I'm read $375 on that. Still positive overall, but it didn't go in my direction. It's still wanting to go up. We'll go into details on that. T-Flow, not much going on there. And Tesla, I'm very surprised by it, but I'm still down $250 on the day. Surprised that it's holding this price level right now. So we'll go into that as well, and my thoughts on the overall market for the near future. So I closed 5 of my 30-20-10 strategy positions this morning. It was all of the positions that were profitable, and these were the 5 that were closest to expiration. I decided to do that this morning when I woke up and I saw that I was red. So I knew that the market was going to be pulling down today, and I thought I'm going to go ahead and try to liquidate some of these positions while I can, try to reduce my exposure, and then go from there. And I'm glad I did, because I'm down on even more as the day progressed. It's a tough reality to understand and to accept that you're not going to win every trade. You're not always going to be making new highs in your portfolio. You're going to be going through waves. You're putting your money into a system that's outside of your control, that is risky, and it's all about how you manage those positions and not getting emotional, letting your emotions drive your trading, and how you respond to market movement. So I'm surprised by Tesla because it's holding its levels when the whole market is going down. We can see that it's basing out here after a steep fall, and it seems to be holding these levels. We have a double bottom here. It comes back up. It breaks through this declining wedge here, and it's holding this level. It's not falling down here. It's not breaking this level. It's not following this trend line. It's really kind of just staying where it's at, which is a really good sign, especially on a day like today. That's what you want to be looking for in the stock market, is whenever everything is falling, what's not falling very much. And we can see Tesla is not. So overall, that's a good sign. I'm pretty impressed by it. Even though it is down, it's not down as much as the other players are today. So with copper overall, it shot up to a new high, but it didn't like it and it pulled back down. And so that was good to see for me. We were starting to recover. It was red on the day, but it started to recover here as the price went down. The optimal price for me to be at right now, because of my strangle, is around that 420, 425 price level. So I really need it to break this trend and come down below the 8 EMA for it to be the optimal trade. Right now it's fine where it's at, but we can see that even though it closed here at around 428, it's currently after market at 434. So if we look at a intraday time frame here, we can see that after it closed, it shot up back up to 434.55. So it's still pushing up, but not up to that new high level. It's still pretty well consolidating around this 434. So it doesn't want to break out past this level. So as long as it stays in this range, I think we're in pretty good shape here. So looking at the curve mode here, we can see overall we're in between the put and the call, but it is favoring the call side. So it's really best if it's around that 425 range here, where I can get the optimal profit. It's just a way that I can get out of the position sooner, because the more it favors one side or the other, the longer it takes for me to get out of the position. So we can see here with the E-mini S&P 500, it is below the 50-day moving average. At the end of the day, we did see a push back up here, but it is sitting below the 50-day. I like to refer to the SPX because I believe that's more popular, and it is actually above the 50-day. So we can see here with the SPX that the price went down and touched the 50-day moving average, and it came back up at the end of the day. This is not a good candle, don't get me wrong, but it was good to see at the end of the day we had some buying pressure coming back up. We have some distance between this moving average, and it doesn't look like we're going to break that level. We're going to find out Monday what actually happens, but it was good to see that there was some distance there, because most of the day it sat right on that 50-day moving average. I went ahead and drew some of these resistance lines, just areas that I think is going to be resistance if the 50-day moving average is compromised. And we see this bottom candle here. It's actually the top, near the top of this candle right here. So this kind of gap between here around 50-50, that's kind of the area of support here that we could see if the 50-day moving average is broken. We also have a good strong resistance level here, some support with the 50 days. So I think this will be a pretty strong level to break. I think when it does, or if it does break this level, it's going to hit pretty hard down at this level. So it just shows that we're really in a strong downturn if it ends up breaking this level. Next week, I believe we're going to find out what the market's going to do. We have a lot of things going on, right? We have earnings coming out with a lot of big companies. Banks were posting their earnings. We just had the CPI report come out. I don't think there's a lot of confidence in the stock market at this moment. We'll find out when the earnings actually comes out what it's going to look like. But right now, what I'm thinking is that it's going to be following this 50-day moving average, and it's going to be hitting a wall at this wedge, this declining trend here. And so what we want to find this to do is to follow the 50-day all the way back up to this line and break. And that's going to give us some confidence. That's going to show us some strength here. And we really don't want it to break the 50-day moving average or to even break these levels here, because that's going to be a sign that we're going to continue to see a downturn and a declining trend here. So even though my account is really down in my net liquidation, I had a bad day, I'm down $1,700 for the day, I'm still out of the money on most of my positions here. I'm really just waiting on these to get out of the money, to stay out of the money, and then expire, and then I can collect some money. I have my 5170 here that's in the money, and I've got 2 positions there. Thankfully, there's 17 and 18 days till expiration. So I have time there for the market to correct. If it goes closer to expiration and it is in the money, then I'm going to have to focus on managing those positions. Right now, I'm not having to worry too much about it because my most recent ones are still out of the money. So I do need to be mindful of that. I want to close out of these positions because I am in heavy. I've got $6,600 in these positions right now, and I'd like to try to liquidate those and reduce my exposure. And just know, the 30-20-10 is not a proven strategy. It's a new strategy, and I'm just sharing it with you to see what happens with the strategy, if it works or not. So far, even though my net liquidation is down, we're still looking okay. As long as the market doesn't continue to go down, then I'll have to be managing those positions. So I'm a new options trader. My goal is to get a 50% return by the end of this year. And if you want to follow me along to see if I can actually make that 50% return this year, hit that subscribe button and I'll share with you what I learned along the way and how my account is doing. If this video was a help to you, hit that like button and we will see you on the next video.